Hi, everyone, and welcome to Stock Market Today. You have Alyssa Corum here alongside Justin Nielsen for a look at the market on this Wednesday, where we saw relatively modest declines for the three major indexes, other than the Russell 2000, a little bit steeper loss there, but we'll get into that. And Apple among those stocks looking pretty interesting today, Justin.
Yeah, we'll look at some really good looking cup with handles from Apple and also Eli Lilly. And then let's talk a little bit about intraday action. You know, all of these earnings coming out, sometimes you're getting excited, you're seeing pre-market activity, but that's not how it plays out. It's not how it starts, it's how it ends. And we'll take a look at Zim Integrated Shipping in that regard.
Yeah, some great lessons there. So we will get to that first. Let's check out the major indexes. So here we have the Nasdaq Composite, which finished the day down about 0.3%. Same for the S&P 500. The Dow down 0.6%, and the Russell 2000 down 1.2%. But all in all, Justin, not a lot of damage here for the Nasdaq. Still right around that 16,000 level. But is that a new resistance area?
It certainly looks like it. Look, we only got up above that level for a few days, and we never closed above it. So right now, that's going to be a very telling, level. Do we get above it? Can we stay above it? And that's what we're looking at right now. So far, it's really hovering right there, and that's not necessarily a bad thing. I mean, the pullback here didn't even come down to the 21-day. It just briefly got below the 10-day moving average line on the Nasdaq Composite. That's the pink line that's showing up on this chart. It wasn't much of a pullback. It was very brief. And then you were right back up. So we're starting to get into what might be called extended territory again. And we're certainly seeing that in a number of individual stocks. So having a little pause here at 16,000 might be just what the doctor ordered, letting it kind of settle down a little bit. Now, one thing I will note, the S&P 500 is kind of having similar action. It's hovering right there at at the highs that the S&P 500 made at the beginning of November. But the Russell 2000, this is the one that's kind of going a little bit counter right now. It's not doing anything particularly bad, but it was nice originally when you seem to have all of the indexes moving together and the Russell 2000 joined them. But now this one's been pulling back and hasn't been able to get back to those early November highs. Part of that is, look, financial energy, that was in particular hit a little bit harder today. And there is a heavier weight sometimes in some of the smaller cap universe for those. But that's something to be keeping an eye on. It's still maintaining itself above that prior high level.
Right.
So that's good. And still above the 21-day moving average line. So certainly not a broken index there.
Yeah, maybe that'll be the floor of support for small caps. And now Apple. AAPL breaking out of a cup with handle today, and a gain of about 1.7%, volume above average on this breakout. Not crazy powerful, but it was above average. And in addition to the breakout above that 153 area, there was even a slightly earlier entry that the swing trader team took advantage of today.
Yeah, we were taking a look at maybe just if you do a downtrend, and Ali, you drew it perfectly right there. As it got above that downtrend, hey, that offers an early entry. So rather than waiting for it to cross that 153.26 level, remember we add 10 cents to the high of the handle, you could get that early entry here. Now, volume was tracking a little bit heavier. I saw it dip down at one point, but it's nice to see that it got back above average. Usually we like to see a little bit more of a volume percent change number. Right here, it's 13%. 50% is ideal or higher. The bigger, the better sometimes. But this is definitely, when you compare it to the recent action, if you look at, the recent volume, this definitely sticks out. So that's good. The only day that was heavier was around earnings. And even though that pink day looks like a lot of volume, 125 million volume right there, look at the way it closed that day. It was down a lot, but it closed at the top of its range, kind of getting support right there at the 50-day moving average line. So you could argue that there was supporting action on that day where the volume was so heavy. So not bad action on the volume. The big flaw is relative strength. This is something that has been basing while the market was going up. And so as a result, you see that relative strength line, which compares this versus the S&P 500. That's lagging a little bit. The relative strength rating at 65 is a little low, but I also would point out that, look, when Apple Computer, that's what it was called back then, when Apple Computer came out of its cup with handle in 2004, it did have a lagging relative strength because there was so much strength in the market from 2003, that 2003 bottom. Apple was basing, and that one worked out. I'm not saying you should expect a 2004 type move from this, but we have seen some of these stocks with even low relative strength still go on to make some decent moves. So this is one that's looking pretty good. 3 weeks tight. A lot of constructive action on the chart.
Constructive chart action indeed. And Justin, I think the same can be said for Eli Lilly, ticker LLY, another actionable trade idea from today.
Yeah, absolutely. This was a nice looking cup with handle. And here we also had an early buy point offer itself up. In this case, rather than taking that left-hand side of the cup and drawing a line from there, we did the handle. So a little bit steeper here, but we did see Eli Lilly break above that downtrend. And again, you don't have to wait until the 271.21 entry level here. That's 10 cents above that high of the handle. This offered a little bit of an early entry, and I really like how this one had some pretty strong volume coming up on that right-hand side. The volume really tapered off as this handle got formed.
Right.
I would have liked to see the volume come in a little bit stronger today, but it was still pretty good. So here we are, right above that 260 level, offering an early entry. And what's great about that is, look, if this gets back up to that high of 271, the high of the handle, then you've already got like a 5% cushion on this. So that can really change how you handle this. Now, taking a look at the weekly chart on Eli Lilly, one thing to just be aware of, this is one that, it usually goes in fits and starts. It kind of has these brief moves and then bases. So this is one that we put on Swing Trader, looking for just a short-term move on this. We'll see what we can get out of it.
All right, sounds good. And we also need to check in on Zim, a shipping name that we've been following very closely since its debut early this year. Reporting earnings today, closing the day up about 5%, had some strong volume, but as you were alluding to at the beginning of our show, Justin, taking a look at the intraday chart when a company reports earnings can really help you get an edge instead of buying right out of the gate based on that pre-market action.
Yeah, I mean, when you were looking at the pre-market action, I think Zim at one point was trading about 10% above the previous day's close. It was looking like it was going to be a strong open, and it was, but that quickly faded. If you look at the intraday chart, you can see what happened. It really started off strong and then immediately started coming down. So for those people that bought early, you're looking at an entry price of around 55, and this got all the way down to 50. You were down 10% within, just a few, an hour or so. So that can be really tough if you're looking for something to go up higher and you immediately start so far behind. That can be hard to hold. Now, this was not unusual action. A lot of times we see these stocks fill in the gap. That's really what it did, just intraday. And it did bounce off that low of the day and closed in the relatively mid-range. So that doesn't mean it's a broken by any means, and it did stay above that 50-day moving average line. However, you just have to be careful. A lot of people look at the strong move at the start and say, look, if this, we see a lot of these earnings reports where the stocks are up 20, 25% or more, and you're thinking that could happen, but you also have to be aware of the downside. You could be down 10% very quickly. So it's a good idea to get the direction after the first few minutes. We always wait at about 10, 15 minutes to get a sense of the direction of the stock before we start making that first purchase.
Yeah, those intraday charts can really give you an edge on those earnings reports. And so speaking of earnings, NVIDIA out with its earnings after the close today, and an after hours trade, at least right now, it's up about 2.5%. But again, we'll have to see what actually happens in the regular session tomorrow. But interesting to see that action for the early reaction to the results tomorrow. And I know the IBD Live team will be all over it come tomorrow morning.
I'm sure we will. This is one we've been talking a lot about because it's been one of the big winners of this market cycle. So we're really looking forward to seeing what happens. And again, it's not how it starts, it's how it ends.
Yes. Exactly. Thanks, Justin. We'll leave it right there. Thank you all for tuning in. We will be back with more tomorrow morning on IBD Live. As I mentioned, check out investors.com/IBD Live for all the details. We'll see you there, and we'll see you right back here tomorrow after the close.